Hey, welcome back. It's JWalter here. Mortgage application numbers for home purchases took a big hit last week. This is according to a new report from the Mortgage Bankers Association, or the MBA. I'm going to share all the details in today's video. So if you guys get any value out of today's video, then please hit the like button. I greatly appreciate that. And with that said, let's begin today's video. So mortgage applications decreased 11% overall compared to 1 week earlier. And this is for the week ending May 13th. And this is thanks to a new report from the MBA that was just published today, which is the 18th of May. So as you guys all know, if you follow the channel, total mortgage applications include refis and also purchase applications for people looking to buy a house. So the refi index fell further by 10% compared to the previous week and tumbled 76% compared to 1 year ago. No big surprises regarding that because, of course, as mortgage rates increase, of course, the share of people who are doing refis, of course, decrease. However, the amount of home buyers submitting loan applications is a big indication of our housing market. So the unadjusted purchase index decreased 12% compared to 1 week ago and also decreased 15% from 1 year ago. And this, of course, is a big decrease because mortgage rates have been increasing greatly. And in my personal opinion, this is due to housing affordability issues with rising mortgage rates and, of course, rising home prices, pricing out more and more home buyers. So here's the latest stats we have from the Mortgage News Daily. They actually pulled data from the Mortgage Bankers Association. Here's their purchase index over the last year. As you can see here, back in April 25th, for 2 consecutive weeks, their purchase index actually increased. However, we saw a big decrease in their most recent data that was just published today at the time of this video. So their purchase index is now at 225, the lowest levels we've seen in at least the last 12 months. So according to Joel Kahn, who's one of the associate vice presidents at the MBA, he said mortgage applications decreased for the first time in 3 weeks as mortgage rates, despite declining last week, remained over 2 percentage points higher than 1 year ago and close to the highest levels since 2009. Purchase applications fell 12% last week as prospective homebuyers have been put off by higher rates and worsening affordability conditions. Furthermore, general uncertainty about the near-term economic outlook as well as the recent stock market volatility may be causing some households to delay their home search. In regards to mortgage rates right now, according to the Mortgage News Daily, right now the average 30-year fixed is sitting at 5.44%, but it's been very volatile this week. It's been basically going up and down every single day. Right now, though, the average is at 5.44% for those who have excellent credit. That's an increase by 2.29 percentage points compared to 1 year ago. So 1 year ago, mortgage rates were at 3.15%, so a big increase over the past 12 months. Also, at the time of this video, the yield on the 10-year US Treasury note, which is tied more directly to mortgage rates than anything else really, the yield is currently at 2.88%. 1 year ago, it was only 1.63%. So in regards to worsening affordability conditions, I talk about this all the time on the channel. According to the National Association of Realtors, compared to 1 year ago, the monthly mortgage payment rose to $1,502 from $1,138 per month, an increase of 32%. What they're looking at here is current home prices and also current mortgage rates in order to get an idea about the increase in the home buyer's monthly mortgage payment. In other words, that has increased approximately $364 per month in 1 single year. So basically for the same house right now compared to 1 year ago, you're gonna be paying approximately $364 more per month in just principal and interest only payments. And in regards to the stock market right now and the volatility we've been seeing right now, it's been absolutely insane. So year to date, the Dow is actually down 10%. The NASDAQ has tanked by 23% so far this year. And the S&P 500 is down 14% compared to January of this year. So going back to this report from the Mortgage Bankers Association, Joel Kahn had this to add. These results, in other words, this decrease in mortgage application numbers is consistent with the MBA's May forecast that was actually released earlier this week, which now calls for fewer home sales and mortgage originations in 2022 compared to 1 year ago. One big issue we have regarding our housing market right now, of course, is rising home prices and, of course, rising mortgage rates. But, of course, it has to do with the lack of houses for sale. real. We've been seeing an increase of housing inventory, which is obviously a positive sign, but it appears we're not going to be seeing a big increase of housing inventory from new homes. So Homebuilder Sentiment, as I reported to you guys in my previous video, has fallen to a 2-year low based on declining demand, basically declining home buying demand, and also rising costs. Also, as I reported in my previous video to you guys as well, total housing starts in the US were at 1.72 million in April. This is thanks to a new report from the US Census Bureau. And this is a 14.6% increase compared to 1 year ago. However, the key word here is total because this includes multifamily properties as well as single-family houses. The gain of 14.6% was mainly driven by strong activity in multifamily construction, predominantly apartment buildings that they plan to build and rent out, of course. Builders are responding to higher mortgage rates and are chasing rising rents, with fewer home buyers and more renters being forced to renew their leases. Even before the rising mortgage rates, apartment vacancy rates were at historic lows and rents were accelerating. Also, some degree of a return to the office is also fueling back to city living, where high rises or apartment buildings are concentrated. So to summarize this, as I've been reporting to you guys, it appears that builders are very bullish regarding the rental market and are very bearish regarding building single-family houses because of rising mortgage rates and, of course, decreasing home buying demand. In any case, going back to this report from the MBA, here's one positive sign I saw. It says the adjustable rate mortgage, or the ARM share of activity, meaning the share of people who are submitting loan applications and to use an adjustable rate mortgage instead of a 30-year fixed rate mortgage, for example, actually decreased to 10.3% of total applications. Last week, it was actually at 11%. However, this share of 10.3% is basically 3 times the amount from January of this year. So it's still at elevated levels, but still very good to see has been decreasing, because in my personal opinion, it's very risky to buy a house right now using a 5-1 ARM, for example. Also, according to the MBA, the average contract interest rate for a 30-year fixed rate mortgage with conforming loan balances, that basically means loan balances of less than $647,000, decreased to 5.49% from 5.53% from 1 week ago. This, of course, is based on people submitting loan applications with at least 20% down. In contrast, the average rate for a 5-1 ARM, meaning the rate is fixed for 5 years and then it becomes variable and adjusts to current market conditions for the year after that, decreased to 4.42%. So right now, because the rate on a 5-1 ARM is approximately 1 percentage point less than a 30-year fixed rate mortgage, that's why we're seeing elevated levels of people submitting loan applications for adjustable rate mortgages. So comment below with your biggest takeaways from today's video. My biggest takeaway was this big decrease compared to 1 week ago by 12%. Also a big decrease by 15% of mortgage application numbers compared to 1 year ago. I'll definitely keep you posted with any new developments, so make sure you're subscribed to this channel, and I'll definitely keep you posted with the latest housing market updates. Hope you have an awesome day, and I look forward to seeing you on the next video.